Good afternoon again. This is Mike Newmeyer, and I'm a financial advisor, and I've got more news for you today. First of all, my number is 410 902 0464. If you're not receiving our mailings, please call us at that number, 410 902 0464. And we have a number of very interesting, very exciting offers right now. You know, we have a private pension plan that gives you a 25% bonus at the beginning. That means your income will be 25% more. This is a very interesting offer that's being made now. We don't know how long it'll be around, but it's now. So give us a call if that interests you at all. We'll be happy to give you the details. Mike Newmeyer. Okay, 410 902 0464. Today, I want to give you some tax information that's current and update and so forth. But I want to tell you ahead of time, I am not a tax person. I am not a tax accountant, and I'm not a lawyer. I'm giving you general information that's public information, and you ought to talk to your tax person in regards to how it affects you personally, okay? But a lot of this is unknown, so I want to get it out there. Not, generally known. First of all, we all know there's a 10% penalty if we're not 59 and a half yet, and we want to take money out of a qualified means an IRA-able account, like a 401k, etc., and an IRA. We have to be 59 and a half years old in order to take money out of it early. And we have to be less, if we're less than 59 and a half, then we're going to pay a penalty. Okay. However, there are a number of exceptions that most people are not aware of, so I'm going to go through them a little bit. Here's some of the exceptions. Early withdrawals from IRAs and 401ks by disaster victims are penalty free, up to $22,000 per disaster. So, if there were two people in the family, a spouse and another spouse as an example, and they both they could take up to $22,000 out of their 401ks or the IRAs without penalty. Now you have to talk to your tax person. Okay, and then IRAs and 401ks can be utilized to pay big medical expenses without penalty. Got to review that also. All these things you have to review if you want them and need them with your tax person. Okay. Taking substantially equal payments from an IRA or a 401k is a key exception to the rule. This is a big deal. And incidentally, this is what a lot of sports figures use. It's called a 72T. I've done this many times for clients. You can take money out at any age, if you use a 72T. And that means that you have to get substantially equal payments based on your life expectancy. Okay, but there is no penalty. Again, I've done this for a number of people. I want to talk to your tax person, but if that's something, and incidentally, once you've started that, you can also work and earn money that has no effect on this at all. There's no penalty involved if you use this, system for taking money from a IRA or 401k and so forth early. Okay, so that's a 72T. Among other 401k and IRA exceptions is the 10% penalty that goes away for terminal illness. That is available also. So keep that in mind. Somebody in your family, terminal illness, IRA money, too young, no penalty. All right. Early payouts from IRAs to help first-time home buyers. In fact, lady used to work here and she did this. Ought to check that out. If you're under 59 and a half and you want to be a first-time home buyer, this is a benefit that's available to you. And also for higher education. If it's used for higher education for your kids and grandkids and so forth, it has to be higher education though. It has to be, things like tuition, computers, books, and room and board. So this is something most people don't know anything about, and it's available. Talk to your tax person. Let's see. The unemployed can use IRA funds to buy health insurance in some cases. Early distributions from 401ks for the above reasons. There are some exceptions, so you have to know about them. You talk to your tax person, but so there are some exceptions, but those things are generally available. Now, let me tell you another couple things that people don't know. There is relief for workers who leave their jobs in the year they turn 55. In the year they turn 55, those early 401k withdrawals escape penalties. Talk to your tax person if you're going to retire early, but this is based on retirement. You're going to leave your job. Okay. If you're a public safety officer, that's a broad definition. Talk to your tax person. Maybe policeman, maybe an ambulance driver, and don't take my word for this. Talk to your tax person. If you retire at 50 years old and you're a first responder, you can retire without penalties on your 401k and your IRAs. So those are paying 401k funds early to an ex-spouse can avoid penalties. Talk to your tax person. Not everything applies. Okay, so those are some ideas, some exceptions that most people have no idea about that may apply to you. I hope this information helps you. You can always call me and I'll try to help you at 410-902-046, 410-902-046 for Mike Newmeyer. Good afternoon.